Masterclass with Super Investors. In this video, the super investor that we're going to learn from is Bharat Jayantilal Patel. He has a unique background of also being an activist investor. A lot of things to learn from him. He realized quickly that in 1985, the government was starting to liberalize the Indian economy. And he also saw the Vajpayee government later started the disinvestment process. So he saw that as a big opportunity. He started the brokerage firm, but he quickly realized that brokerage is not where he's going to make a lot of money. He gave some example. It started with 2% brokerage commission when it was during the 1985 time period. It was highly speculated. The spreads were high, and he says now it's 0.15%, and in some cases close to 0%. In the United States, there is 0% brokerage. So he thinks that that low of a margin and also increased compliance cost reduce profitability of brokerage firms today. And he believes that large companies and with large setup or large brokers, only they can survive. He didn't have any analysts. He used to read annual reports, had good accounting background. So he used to just check for congruence in body language of the management, what he read from their annual reports and their future statements, and he just tried to validate it. He also shared something very interesting. He said, don't regret after you've made a decision to sell a stock, and if the stock goes up, don't regret, right? He says the cash is king when you could always redeploy it to something else. And so in markets that are mature at this time, he said he used to get a lot of these 10 baggers, which were like 10, 20, 50 crore market cap, but you no longer see those anymore. The cost of capital has gone down. The companies have started expecting valuation to be much higher. So he says today, in today's world, small and mid cap, 20 to 24% CAGR is plenty. So that's important to know what it was before and what's expected now. And he's used this trick over and over, which is he sells high and buys low the same stock that he really likes. If he sees over exuberance, he will keep entering and exiting and making that profit. He never understood technology and he'll never invest in it. So he was in his circle of competence investing where he thought made sense. Valuation wise, replacement cost is what he would mentally calculate and find out the business fundamentals and the future growth and see what the value looks like. So back of the envelope calculation really helped him significantly. His mantra is to sell up, sell up. So sell on the way up. By that sell up, what it means is don't wait for the markets to peak and then sell on the way down, because he says that the markets turn really quickly. From the other investors in the series we've seen, they said don't sell up because you could double from the time you sell. So, but he says, it is true you would lose some gains, but sell on the way up, because when the markets turn, they turn very quickly. So those lower circuits, they can be back-to-back 5%, 10% circuits, and so it's very, very hard when there's low liquidity for you to sell. So he highly prefers to sell on the way up, so sell up. And he thinks that also gives him time and flexibility to think what to buy when the market is crashing. Then he has the money. So he's not doing two things, trying to sell and trying to buy. He's just trying to sell when it's going up and buy it when it's going down. The other key insight as an activist side of his experience, he says that the legal system in India is very slow. The rules and regulations are there, but the litigation time and effort is just not worth the benefit. So avoid promoters who you potentially have to fight with, or you might have to take over those companies. It's just very hard and time consuming. So avoiding those is the best way to go. Fun fact, he had a 24% stake in the ABCL, Amitabh Bachchan Corporation Limited. So he owned 6 lakhs out of the 25 lakhs that that company had, and he learned quite a bit. He also had to eventually, through his investment in Rupfila, he had to actually take on that company and eventually became the chairman. So that's the activist side of him. He had to roll up his sleeves, hire the right people, handle the operations, make all the calls. And he thinks that knowledge of books may not be relevant. So it's good that he says may not, because if he says it's not relevant, then that's just I would have discounted him. He says it may not be relevant because there's constant change and evolution in the stock market. So he's not read any investment books. So that's where nothing specific came out from this chapter. He says understanding the business and having the conviction to buy sizable stake is what makes all the difference. So do not be fearful when the market is down. Do not be greedy when the market is up. And have the patience to hold for as if it's your own business. So that's insightful. I was thinking about it as well. The company that I work in moved 6x in the last 5 years. If I would have just hold the initial corpus, that money would have been 6x. So by the 5-6 years time period is the key. When you buy something, you can't make a decision to sell within the next month, 3 months, 6 months, 12 months. You have to give years. So he says, be sincere. Hold the shares of the company as your own company. The company that you own as your own company, right? So being sincere, being long-term, and really letting it pan out over years is critical, which I thought was very, very important learning from this entire video. Being sincere, having that conviction, buying those sizable stake, and then having that patience and not to look at the stock market every so often. So that is Mr. Bharat Jayantilal Patel. A lot of good learnings from him. Sell up and be sincere.